Yo, welcome to another episode of technical analysis here on my channel where I teach technical analysis and how to trade totally for free. Yes, this is relating to our last video where we talked about order blocks, the formation, and how you can identify them on your chart, including your breaker blocks, which are entries you can actually use to enter the market while trading. Now, but this video now is about, just like I promised in the last video, if you've watched the last video, if you have not, you can simply go back to my channel and watch the last video about order blocks so that you fully understand what order block is all about. And then this particular video is about how you can trade order block. Not all order blocks are tradable. There are things you need to see in the market in order to identify or determine that this particular order block situating at this particular zone is tradable, and those things are what I'm about to expose in this video. So stay to the end of this video in order to get the full knowledge of order block from this video, and don't forget to like and subscribe to this channel. If you're just coming across this channel for the first time, go ahead and subscribe to the channel and stay to the end of this video. I bet you won't regret that. And make sure you share to your friends so they can actually get the same knowledge you are getting here for free. Now let's get down to business. There are five different things you need to identify before you can decide that another block is tradable. Five different things you need to consider before you decide that an order block is tradable. Now, we'll be taking it one after the other, and I'll be showing a pictorial view of what I mean. And equally, I'll be showing how it happened on the chart and how I equally traded it personally. That is exactly how I decide my trade. And when you do this, you practically going to make an analysis using XMC smart money concept knowledge fully just by monitoring a tradable order block. You're going to identify all those confluences like break of structure, liquidity, inducement, and all just by monitoring a tradable order block. And then at the end of this video, I will equally tell you how to avoid those order blocks that are not tradable and how to identify a tradable order block that is still not tradable, because some tradable order block that you will be done trading and then it will no longer be valid for you to trade again. How you can identify that, I'm going to be exposing all that here in this video. Now, you have five things you need to consider in order to know a tradable order block. Number one, you need to consider a tradable order block must lead to a break of structure, that is BOS. If you don't know what break of structure is, you can go back to my channel and watch other videos. There is a video I made particularly on market structure, break of structure, and change of character. So you can actually go back to those videos, watch those videos, and then come back to this, and you are going to flow with us better. Now let's move forward. An order block must lead to break of structure, just as it is in this picture. You can see the zone I marked out, order block OB, and then you can see that it powered a move for a break of structure there on this picture. So another block must situate in a particular place where it will be able, or where it must situate in a particular zone where will be considered as a demand zone that will actually power for a move to change the market structure, or rather to power for a move to change the character of the market at any point in time. That is one characteristic that you need to identify, and before you can determine that yes, that particular order block situating at that particular point is a tradable order block. This is a pictorial view where I used something like that. You can see that the order block is already situating at a place that took out or changed the character of the market, which is where I marked break of structure, and the market continue going up, which it is going to come back later to take that our order block, which order block is equally a point of interest or an entry mode, is equally a particular thing we see in the market that will enter the market either buy or short with. Now, number two, you will have to, an order block should be formed after a liquidity sweep. I repeat, an order block should be formed after a liquidity sweep. So whenever there is a break of structure, you wait for a break of structure, then you identify another block that powered for the move for the break of structure. Number two, you have to identify if there is a liquidity sweep before the other block was formed, then before the market structure was broken. Now, and it is here on my screen. You can see the other block there, you can see the break of structure, and you can see the previous liquidity that was swept away or that was taken. If you are an SMC trader, or if you have been following my video, I will still make a video on liquidity and how you can identify them and how you can trade them. So just keep still to this channel as you move forward, and you're going to be learning a lot of things in technical analysis and how you can trade with them. So that is number 2, just as it is being showed on my screen. Now let's move on to number 13 that you need to identify before you can know that yes, another block is a tradable order block. Number 3, an order block must create an impulsive and a momentous move, leaving behind an LVG or a FVG, meaning another block must situate in a place where it will create an impulsive or a momentous move that will cause a break of structure after a liquidity sweep, a momentous move that will cause a break of structure, and then leaving behind an FVG. So when there is an FVG above another block, and that particular FVG or momentous move made a move that broke a structure or change a character, that other block is becoming a more stronger tradable order block, just as seen in my screen. This is just a breakdown analysis I did on a particular trade and how I choose that other block to be my entry after considering all these whole confluences like liquidity sweep, like I mentioned, the break of structure, change in character, inducement, and all, even imbalance, which is the FVG. We're talking about the fair value gap. That's the meaning of FVG. So that is number 3. That's number 3 characteristics that you need to identify in order to decide that another block is a tradable order block. And then number 4, an order block must have inducement or engineered liquidity above. I repeat, an order block must have inducement or an engineered liquidity above. Now, whenever an order block have an inducement or engineered liquidity just above the order block, then know that this order block tends to be a very tradable order block. This particular method, definitely it worked for me. I must have an inducement that is situating just above the other block I'm about to use. After considering my break of structure and my liquidity sweep and all of that, then I must have an inducement pointing to my other block, just as seen in this picture. You can see an inducement pointing to the other block just downwards. That inducement, according to liquidity or law of liquidity, it is simply where money was dropped. Money was dropped just below there, and according to law of liquidity, any money dropped anywhere or any imbalance anywhere must be balanced later now or later. Now, any inducement, any money dropped anywhere, the market must move to that particular point in order to pick up that money that was left at that point in the market before the trend continues. So when an inducement sits above an order block after a break of structure and a liquidity sweep, it is considered that that particular order block is a tradable order block and it can be used to enter the market, just as seen on my screen. We are making a breakdown analysis on how you can choose a tradable order block as your entry, whether you are going long or you are going short. Now that is that for number 4. And then lastly, the last one before I tell you how you can avoid some other blocks. Lastly, on the number 5, we have an order block should have a line between higher time frames and lower time frames. What am I trying to say here? Whenever you get all these other blocks and then you're about to consider this number 5, do well to make a refined analysis. That is, moving down from higher time frame to lower time frame, reducing, probably if you find the other block on 1 hour time frame, reducing it down to 30 minutes or rather 15 minutes to see if you can still see another order block inside the 1 hour order block. Now you will see a candle formation that formed that particular 1 hour order block. You see some formations and you probably see another order block on the 30 minutes or on the 15 minutes still there on that particular 1 hour time frame. So it must align both in smaller time frame, which is lower time frame, and you can align it must still align both in higher time frame. Then you know that yes, even in smaller time frame, this place is advised for you to make your entry, and even in higher time frame, which is your major time frame that you're using, you still know that yes, this place, this particular zone, it is still advisable for you to enter the trade, just as seen on my screen, where the higher time frame and the lot of I refined it and I'm getting an order block both in the 30 minutes, in the 15 minutes, and equally in the 3 minutes. And I'm getting another block in the in the 15 minutes and equally in 3 minutes after refining. There is another block in the 3 minutes and there's still another block in the 15 minutes. And this other block emanated from the 30 minutes other block there. So there's other block in the 30 minutes, 15 minutes, and equally in the 3 minutes. So it is a good criteria for me to identify that yes, this is another block, considering the break of structure that was taken out, the liquidity sweep earlier that was taken out, and then the LVG it created immediately after creating that particular other block. Now moving forward, it came down, dropped an inducement and some liquidity there, which money will come back to pick. And when the money is coming back to pick this liquidity, it is definitely picking our other block, which is our long entry. And at the end of the day, I have this as the result of this trade. So at the end of the day, when market is done doing all those, it came back and picked our particular other block. Now if you watch my entry very closely, you will notice that my entry, it is not on the head of the 30 minutes other block, just like I explained on how to draw out an other block in my previous video. It is not on that edge, it is below around 50% 50% in 50% in the middle of that particular rectangle. So it is safe to place your entry. That's if you refine your entry, if you have identified that the other block is there on 30 minutes and is equally there on 15 minutes and is equally there on probably 5 or 3 minutes, then it is safe to use either the 15 minutes. And using the 15 minutes other block, you are probably going to get your entry around 30% inside the rectangle, or 30 or 50% inside the rectangle. And that is exactly what I did here. And you can see the market coming down to take out that liquidity where I marked dotted lines with X in their middle, coming down to take out that liquidity with the initial break of structure, which is change the character there, and then bouncing on my other block, and then boom, we went log and printed to final profit. So these are the 5 things you need to consider, anytime you're choosing another block or you're making analysis. Now mind you, there are rules to this other block and things you must avoid. Like other blocks like this, whenever another block is taken, listen carefully to this, whenever another block is taken, if what mitigated that other block or what took that other block out, it did not go inside the other block at least 30% in, it didn't take it 30% in, then mind you, that other block is still valid. So to me, an other block is considered invalid or mitigated when it has been taken out at least 30% in of it. Just for instance, let's take a look at this on the screen. Now it must go, you see my entry went in at least 50% deep, so that particular other block is now invalid. It has served the purpose which it is meant to serve, and it has pushed the market to my profit. Now there is a very high probability that if the market should come back to that particular other block again, it is no longer going to hold, it is going to take out that particular other block. But there is high possibility that if this my entry actually took out the other block 20% of time, maybe it didn't go deep up to half of it, it just went in maybe 20% of the time, there's every possibility that that is a liquidity grab, and it will come back to take out the early buyers by dipping in around 50%. So that other block is probably still valid when it takes at least 20% in or 10% in, until it goes like 30% into that trade, then it is considered that that other block has been mitigated. So these are stuffs you have to avoid when choosing an other block and when making a trade using the smart money concept. There are a lot of other blocks in the market, so you should learn to identify that which is tradable and that which is not tradable. Now apart from these 5 things I have mentioned, any other block that does not carry all these 5 characteristics or carry all these 5 criteria, then it is not a good other block and you should avoid trading them. Now mind you that these 5 characteristics I mentioned is a good confluence, you should consider when making an analysis before you take either a buy or a short. That is before you make your trading decision or you choose your trading bias. So by the time you identify all this, you already have up to 5 or 4 confluences that is actually identifying that yes, that is a very good trade to take, then you enter. But in a non-tradable other block, it will be very difficult for you to identify all these confluences in another block that is not tradable. So whenever you cannot identify all these 5 characteristics or confluences around around any other block, then mind you, that other block is not tradable and you should avoid it. Now thank you for staying to the end of this video. I hope you actually grab something very important and interesting in this video. And just as interesting as this video is, our next video is going to be better. So stay tuned to this channel, like and subscribe, and equally turn on the notification so that whenever I make a new video, you can actually rush to pick knowledge for free. That is that for that. Now see you in the next video. Shalom.